Most investors chase the wrong stocks. They pile on tech, gamble on penny stocks, and pray that their portfolio does not crash. But what if I told you there's a class of stocks that pay thousands of dollars in dividends every single quarter, even during a recession? And in this video, I'm exposing the midstream stocks that are funding retirements, beating inflation, and making investors rich while they're sleeping. So stick around because number 7 could actually make you rich. Midstream companies only focus on transportation, storage, and processing of oil and natural gas. These are companies that are quietly paying out 6 to 8% in dividend yields year after year, without worrying about the stock market crashes or inflation, and Wall Street does not want you to know about this. Most dividend stocks can barely keep up with inflation, but midstream stocks, these companies literally print money every time oil and gas flows through their pipelines or it's stored at their terminals, no matter what happens to global oil prices. And here is why you should own them. They have long-term contracts, which is fee-based. They offer recession-proof cash flow, which equals stable dividends, and you get a high dividend yield as high as 6% or 8% in most cases. Starting at number 1 is Enterprise Product Partners, or you can call it EPD, which is a midstream energy company that operates over 50,000 miles of pipeline and storage facilities for crude oil and natural gas. It has a market cap of $72 billion and dividend yield of 6.5%. And if you look at its growth metrics and performance, the company has a total return of TTM, which is a 12 trailing month compound annual growth rate of 31%, which means for the last 12 months, the company has grown by 31%. The revenue growth for the same metrics, TTM, is 16%. EPS growth last 12 months at 4%. Imagine owning a business that collects fees every time oil and gas flows through their pipeline. That's EPD, a midstream monster that has been paying and increasing dividends for over 25 years, which makes it a dividend aristocrat. And if you've not watched my other video, make sure you watch my other videos about dividend aristocrats and you are going to understand what it means. Coming at number 2 is Energy Transfer, ticker symbol ET, and this is one of North America's largest and most diversified energy and midstream company. They own and operate approximately 125,000 miles of pipeline and energy infrastructure. They are also expanding into renewable energy while maintaining strong cash flow. They have a market cap of about $68 billion and a dividend yield of 6.35%. And if you look at their performance, the company has a compound annual growth rate for the last 12 months of 55%, revenue growth for the same period of 6.5%, EPS growth for the same period of 12 months, 4%, and the dividend growth for the last 12 months at 3.2%. Coming at number 3 is my favorite stock, Kinder Morgan, ticker symbol KMI. This is North America's largest energy infrastructure company, specializing in ownership and operation of pipelines and terminals that transport natural gas, crude oil, petroleum products, and carbon dioxide. This company controls 40% of US natural gas transportation. They have stable growing dividend with strong cash flow, dividend yield of 4%, market cap of $60 billion, and the growth metrics are as follows. The company has a compound annual growth rate of 60%, revenue growth rate for the same period is down by 1%. The EPS growth, however, is up by 18%, and their dividend growth for the same period is at 2%. And if you're still watching this video, please consider subscribing and helping me reach 1,000 subscribers. And don't forget to join my free Discord where I trade stocks and options live. A link will be pinned in the first comment. Coming at number 4 is TC Energy, ticker symbol TRP, and this is a North American major energy infrastructure company based in Alberta, Canada. The company operates one of North America's largest natural gas pipeline networks, approximately about 58,000 miles, and this company actually owns the Keystone Pipeline, which was cancelled by the Biden administration. But things are about to change because Donald Trump is back in the White House and he is pro-oil. This company has a dividend yield of 5% and has increased its dividend for the last 20 years. It has a market cap of $46 billion. And if you look at the metrics, the company has a compound annual growth rate of 20%, revenue growth for the same period about 6%, EPS growth is up by 832%. while the dividend growth rate is down by 11%. Coming at number 5 is Williams Company, ticker symbol WMB, the natural gas giant based in Oklahoma. This is another major energy infrastructure company, primarily focuses on natural gas processing, transportation, and storage. They own and operate more than 30,000 miles of natural gas pipelines, including Transco pipeline system, which is one of the largest natural gas transmission systems in the United States. They have a dividend yield of 3.4%, market cap of $66 billion. And if you look at the growth metrics, they are as follows. The company has a compound annual growth rate of 60% for the last 12 months. Revenue growth is up by 5%, EPS growth 8%, dividend growth compound annual growth rate is down by 6%. And coming at number 6 is the ultimate growth play, Cheniere Energy, ticker symbol LNG. This is a leading energy infrastructure company primarily focuses on liquefied natural gas, LNG production and export operations in the United States. The company operates some of the largest LNG facilities in North America, including the Sabine Pass LNG terminal in Louisiana and Corpus Christi. It has a dividend yield of 1%, which is the lowest, but the growth, you get the higher growth on the upside. Coming at number 7 is Mplx, based in Ohio, is a master limited partnership formed by Marathon Petroleum that operates in the midstream energy infrastructure and logistics business. They own and operate about 13,000 miles of crude oil and refined product pipelines and storage facilities. They have about a market cap of $51 billion and a dividend yield of 7.36%. And if you look at their growth metrics, they are as follows. The company has a compound annual growth rate of 48%. The revenue growth for the same period is at 8%. EPS is up by 13%, and dividend growth is also up by 13%. Coming at number 8 is Pembina Pipeline, ticker symbol PBN. This is a leading North American energy transportation and midstream service provider in Alberta, Canada. The company operates an integrated system of pipelines that transport various hydrocarbon liquids and natural gas products. But what makes this company special? It's a dominant midstream player in Canada. It's also a monthly dividend payer, so you get paid dividends every single month by owning this company. It's also expanding the business LNG exports to Asia, which equals future growth. It has a market cap of $21 billion, dividend yield of 5%. The compound annual growth rate for the last 12 months is at 10%. Revenue growth for the same period, it's down by 17%. But the EPS growth for the same period is at 4%, and the dividend growth is at 3.3%. Coming at number 9 is Plains All American Pipeline, ticker symbol PAA, the oil pipeline specialist. It's another midstream energy infrastructure company headquartered in Houston, Texas, and the company owns and operates an extensive network of pipeline transportation systems, terminals, and storage facilities. It has a market cap of $13 billion, dividend yield of 8%, total compound annual growth rate TTM 37%, EPS growth for the same period is at 20%. Coming at number 10 is Enbridge E&B, the midstream energy giant. This company is based in Canada. They operate the world's longest crude oil and liquid hydrocarbons and transportation system. Their infrastructure network includes approximately about 17,000 miles of pipeline across North America, transporting 30% of North American crude oil. This company has a market cap of $97 billion, dividend yield of 6%, the total return compound annual growth rate TTM 23%, revenue growth 3%, and EPS growth for the same period 3%. So my question to you is, which stock do you think has the most potential? Drop a comment below, and also don't forget to subscribe and watch other videos on my YouTube channel.